Assalamualaikum and a very good day. My name is Ahmad Dina bin Azlan, and today our group are going to talk about the challenges in education takaful, such as awareness and financial barriers. So we are from group 2 BA27995B. Next, this is our group member. And next, this is our list of contents, starting with introduction and ending with recommendation and conclusion. So next, a little bit of introduction. So what is takaful? As we know, takaful is derived from an Arabic word, which is kafala, that means mutual guarantee or responsibility, whereby a group of participants agree to guarantee each other against a defined loss. In other words, takaful is an Islamic insurance that follows Sharia principle or Islamic law. The purpose of takaful policy or plan is to help and support each other based on the principle of cooperation and mutual assistance, in which it's enable members to pool money together, such as in pool fund. So there are two types of takaful, which is general takaful and family takaful. Next, I will talk about the education takaful. So what is education takaful? So as we know, education takaful is under the family takaful product. So it is one of the takaful product that focuses on funding a child education fund, in which at the same time it's provide protection for the children. So in education takaful, uh, every takaful agency, such as in Malaysia, offer different benefits and plans for the participant, in which, for example, HSBC Amanah Berhad offers a plan that cover death and total permanent disability, and also at the same time protect the children from financial hardship in the event of unforeseen, which is the accident of the children that lead to death of the parents or permanent disability. So next other example is Takaful Malaysia Budi, in which the education plan provides complete coverage for your child, including critical illness and ongoing education savings until they mature. So why is it education takaful is important for the parents or the participant? It's because nowadays it's helped the children, and also at the same time it's helped the parents in making early preparation for the children education saving. So if a parents die or become disabled, the takaful plan assures that the children education fund can be continued. So even though there is so many benefits with the plan, there's also current issue or challenges that the education takaful faces, such as low awareness and financial barriers. Next, I will pass to my friend Esan.
Assalamualaikum everyone. My name is Muhammad Ehsan and I'm here today to walk you through the unique Sharia compliant structure of education takaful. This is a financial product that successfully combines saving accumulation with risk protection for your child's future education. What sets education takaful apart from conventional insurance is its dual account structure. When you make a contribution, your money is not pooled into a single fund. Instead, after deducting the operator's fee, it is immediately split into two separate accounts, each with a distinct function. The first account is the participant's account. Think of this as your personal savings fund. A large portion of your contribution goes here. The takaful operator invests this money exclusively in Sharia-compliant assets such as sukuk or Islamic equity funds. The growth mechanism here is based on the mudarabah contract, which is a profit-sharing arrangement. Any profits generated from the investment are shared between you and the takaful operator based on an agreed-upon ratio. Your PA grows over time through your contributions and the compounding of these profits. At the end of the term, when the plan matches, the entire PA balance plus all profit is paid out to you as the education fund. A second account is the participant special account. This is the mutual protection pool. A smaller portion of your contribution is channeled here as a tabarruk, which is a donation. This fund doesn't belong to you individually. It belongs to all participants collectively, embodying the principle of ta'awun or mutual assistance. The PSA's sole purpose is risk protection. If a participant like yourself suffers a misfortune such as death or total permanent disability, the agreed upon sum covered is paid out from the PSA to your beneficiary. Critically, if the fund has a surplus after paying claims, the surplus may be distributed back to the participants. The takaful operator is not an insurer. They act as a manager or agent. Their role is defined by a hybrid structure using two key contracts. First, wakalah. For managing the fund and administration, they receive an upfront fixed wakalah fee. Second, mudarabah. For investing the PA funds, they receive a share of the investment profits. This setup ensures the entire process is Sharia compliant by avoiding the three prohibitions of riba, gharar, and maisir. Finally, a key feature is the payer waiver benefit. If the parent dies or becomes totally disabled, all future contributions are waived, but the Takaful operator continues to pay them on your behalf. This guarantees the child still receives the full intended education fund, regardless of what happens.
Today I will be presenting about the current issue about low awareness of education takaful. The slide show the current issue from a news report by Malay Mail where the Deputy Finance Minister mentioned that public awareness of takaful and insurance protection in Malaysia is still low. Many Malaysians still do not understand why takaful is important or how it can protect them financially. The first main point from the article is that a large portion of the population does not have enough takaful or insurance coverage. It is estimated that about 60% of Malaysians lack adequate protection, especially for emergencies. This shows that many families are still unprepared for unexpected situation. The second point is that more awareness efforts are still needed. The government wants to strengthen education about takaful in schools, universities, and communities, including both urban and rural areas. This is important because people need clear and simple information to understand how takaful benefits them. The third point is that many rural residents still do not have takaful, making them more unprotected during disasters or emergencies. For example, during the past floods, only a small number of affected vehicles had a protection, which caused many families to suffer heavy losses. Now, when we look specifically at education takaful, the issue becomes more worrying. Many parents still do not clearly understand how education takaful works or why starting early is beneficial. Because of this lack of awareness, many children may face financial challenges when they want to continue their studies in college or university. Since education costs keep rising every year, proper financial planning through education takaful can help reduce the burden on families.
Assalamualaikum, my name is Arizafan bin Shaizan, and the next current issue is the high cost of living reduces disposable income. So the increasing cost of living in Malaysia leaves a lot of families in Malaysia with very little disposable income after meeting their basic needs like food, shelter, and transport. And due to this, education takaful would not be a priority even to the parents who consider long-term planning. Low financial flexibility contributes to the fact that it is challenging to make regular contributions. So research has been found that the leading cause of families not enrolling or not able to continue with takaful is the affordability and income limitations. The 100 to 200 ringgit is said to be heavy even by lower income households at the high living cost periods. So an example that has been covered by the Malaysian Reserve is that in 2024 Malaysian have been struggle with the cost of living. And then we're moving on to the next current issue, which is education takaful seen as a long-term financial burden. So unstable jobs and economic uncertainty are factors that put families afraid of the long-term takaful programs. Most of them would rather have the money in form of liquidity than as monthly payment, particularly when there is inflation or job insecurity. This impression decreases the attitude of even the ones who knows the advantage. So the demand of takaful reduces with an increase in income stability, inflation, and unemployment. The families are not undertaking long-term commitments because they are afraid they may not be in a position to make the payments. So as we can see here, these are the schedule of monthly contributions that you have to pay when you try to enter education takaful. So at the entry age, we have at the bronze 94 ringgit, entry age 5 90 ringgit, entry age 10 is 86 ringgit, and entry age 15 is 84 ringgit.
Assalamualaikum warahmatullahi wabarakatuh. My name is Adam Iskandar bin Shairul Amri. Now I will present the implications that arise from the challenges in education takaful. The first implication is low enrollment in education takaful. Due to limited awareness and understanding, many parents still do not fully know how education takaful works or why it is important to start early. This lack of knowledge causes them to overlook takaful as part of their financial planning. As a result, fewer families participate and this slows down the overall growth of the takaful sector. When participation remains low, the industry becomes less effective in fulfilling its role of providing Sharia-compliant financial protection for future education needs. The second implication is a higher financial risk for children's education. When parents do not subscribe to education takaful, they are less prepared for the rising cost of higher education. This increases the financial burden on families, especially during periods of inflation or economic uncertainty. Without proper protection, parents may end up depending on education loans, which can create long-term debt. In some cases, children may even have to limit their education choices or delay their studies due to insufficient funds. The third implication is a weaker long-term financial planning culture among Malaysian families. Because many people view takaful as a long-term burden, they are less willing to commit to regular contributions. Economic instability, fear of unemployment, and rising living costs makes families prefer liquidity rather than structured savings. Over time, this mindset weakens the culture of long-term planning and reduces financial resilience. Families become more vulnerable during emergencies and may struggle when unexpected expenses arise.
Next, I'll talk about the recommendation, which is, first of all, it is needed to improve takaful education and awareness to community. The need to incorporate financial literacy and takaful into the circular. Next, carry out awareness campaigns that are inherently illuminated regarding the non-religious, collaborative, and ethical overlay of takaful. Next, it is needed to launch new and low-cost takaful. For example, increase cheap and adaptable products to meet the demand of low-income earners. Next, discuss the possibility of launching subsidized community-based takaful plans to make it more accessible or to vulnerable groups or those with low incomes. Lastly, it is to enhance industry cooperation and trust in consumer. Introduction of a close relationship among regulators, takaful firms, and institutions of higher learning can improve disclosure and consumer protection practices to gain trust in the industry. To sum it up, this issue can be overcome only through a common joint action. The focused education intervention, the promotion of innovative and affordable takaful product, and the focus on consumer confidence and financial literacy can guarantee that education takaful will achieve its potential of offering sustainable peace of mind and securing the future of every child. Upon making the correct decision at the right time at the beginning, tomorrow will be financially secure. Thank you.